GM, everybody. All right. So I'm still on my way back to the gym from the gym, right? So basically, just let's just give them like 5 to 10 minutes so that they can join the call before I come and start hearing questions that I've already spoken about. All right. Thank you. I'm very close to my house. Bye. So I don't know if they gave the other people wrong link. Oh, did they give another link today or something? Because I think this was how we started the other day. Then I came back and I saw over 200 people on the call and they were talking about the wrong link. So did they give a new link today? All right. Good evening, everybody. So it's 8:10 today. 8:10 now, right? And I think we have waited long enough. Yeah, we certainly have, right? We have certainly waited long enough. So I'm going to start teaching now, right? I'm going to start teaching, and yeah. So just get thyself prepared, all right? Get thyself prepared. Do you have your book? Do you have your Bible? Today is the day you most likely need it the most. Okay. Mhm. Good, very good. So today, I don't know, I actually have a PDF, right? For this particular class I want to do, but I don't think I want to use the PDF. I think the PDF will confuse you guys more. So I'm going to be drawing out every single candlestick pattern that I want to talk about, and you guys are going to see it. All right, good. So please, I'm going to draw them out, and I'm going to give you rules for those candlestick patterns. Now, today, like you have been hearing me talk about, we are going to discuss candlestick patterns. I've been extremely stressed. I've not slept very well for the last 2 days. So, yes, this is the reason why my voice is not very loud this evening. But of course, don't worry. When the anointing comes upon me, I will raise my voice. All right. Thank you. Now, I'm sure you all had a great day because I'm about to make your day greater. Now, I saw most of your assignments and I've gone through a bulk of them, right? Okay. Two different links are being dropped. No wonder. That's what I'm saying. Are two different links dropped? Let me check that income message. You said two different links are being dropped in the groups and people are in the other wrong link waiting. You see, okay, so please, admin, can you help me with that? Please, can you help me with that? Maybe in 5 minutes, let them come here because I cannot necessarily, because I know by now there should be over 100 people here, right? Normally, by 8:05, there are normally over 100 people. So I think maybe there was another link. So please just check that. No, I've not started teaching now. Allow me, let me talk normal. I've not started teaching. I'm talking to admin. All right, I've not started teaching. So as that issue been dealt with, please, because the last time it was quite hectic when they came in late. Okay, Mrs. Sifioma said there are no two links, so please, unless those people with this stubborn head, I went and entered the last one that they gave them that other period, and they said that's not the link. Because I think I even said it today. I said, look, oh, we have just one link, and it's the same link from day one. Okay, it's the same link from day one. A prayer is going on. Okay, I'm getting started, please. I don't know. Pray God helps them find their way here. A prayer is going on in the list. The link. Who is praying? Why are they praying? Women in crypto have prayer group. I didn't know. Okay, and that group is for prayer. Okay, allow them, let them pray now. Let's get discussion. I didn't know that we had prayer group here. But that's fine. That's fine, guys. So, for me too, I like to pray. Sure. Let's go and spend 4 hours praying now. 4 hours minimum. We are sending to the spirit. All right, guys. So yes. Oh, some people are just coming there from. Please, you guys should use the same link. Don't be making such mistakes. This type of simple mistakes are the type of mistakes that you make, and I look at you and I'm like, why are you making there? Do you understand? So we can't be making such mistakes, all right? We can't be making such mistakes, please. So let us pray our own here too. Let's pray our own here. In Jesus' name, Father, open the hearts of everybody here. Let them listen, let them understand, and let them know exactly what we are talking about today. Because what we are talking about today is extremely important and very vital for their journey. So help them to understand. Give me the very extreme wisdom to speak it into the hearts of men. Thank you, Father. Bye-bye now. All right, so I've spoken to God and He has heard us. Now, shall we begin? So, today we are going to discuss candlestick patterns. So, write on your book, candlestick patterns. Write it there. Candlestick patterns. All right. We're going to discuss one, just one. Every day we'll discuss only one. We'll never discuss two at once. Never. Okay. So prepare thyself now. Good. Now, what is a candlestick pattern? What do candlestick patterns actually mean? What are they talking about? Right? Very, very simple. Now, over the years, as these candlesticks, remember yesterday we learned about candlestick, we learned about high, we learned about low, we learned about open, we learned about close, we learned about high pressure. When we say we see long candle, we are talking about high pressure, right? We see long bullish candle is high buying pressure. We see long bearish candle is high selling pressure. We're talking about how bearish candles and all those things. We're talking about a lot yesterday. All right. So after studying this thing over time, maybe the people down that now started advancing it, they were now looking at it and they were saying, look, every time that these two candlesticks come together, something normally happens to the market. You understand? So they were saying, look, every time these two come, every time this one appears, this thing will happen. Then they now studied it. Remember, technical analysis is what? Is the use of previous market data. So they have been looking at the previous market data, and from what they were seeing that every time one candlestick appear like this, it doesn't have real body. If it appear, the market normally reverses. They saw it again. They say, okay, no, look, every time this candlestick appear, the market normally falls. Every time. So when they were looking at this thing, they now began to notice what? Patterns. Even in your life, there are patterns. Yes, there are patterns in your life. For some of you men here, every time you get money, women will start calling you. You don't know it's a pattern. So I'm teaching you now. All right, it's a pattern. Now listen, it's true. It's a pattern. Some of you, the day you decide that no, you know what, I'm not doing this life again. That is the day that girl that you have been waiting for will now call you. It's a pattern. But the only way you can know that it's a pattern, the reason why you don't know
that is a pattern yet is because you have not done what? A study on the previous market data of your life. And that is the reason why technical analysis cannot work for you in your own life. Do you understand? You don't sit down and analyze yourself. Say, wait, oh, when do these people always call me? It's when money enters my hand. That is what technical analysts were doing. When they came and they sat down, they say, wait, oh, every time this candle appear, market normally reverses. Okay, I've seen this one. Let me see it again. Are you getting me? They say, let me see it again now. Let me see it again. The next time they saw it, the thing now acted correct. They say, hey, it's working, you know. That's where candlestick patterns come from. So a candlestick pattern is a form or a style, a candlestick or candlesticks. Let's come back again. A candlestick pattern is a form or is a style that a candlestick or a group of candlesticks. You hear the words I said? I said a candlestick, that is from ranging from one, or a group of candlesticks take that can affect the market. A candlestick pattern is a form or a style that a candlestick or a group of candlesticks take that can affect the market. Now, of course, there's no definition for candlestick patterns, but I'm just giving you a brief example, a brief definition of what that thing might actually mean to you. Okay, very, very good, very, very good. Now, today we are going to discuss one of the most glorious candlestick patterns. Now, my anointing has come. All right, today we'll discuss one of the most glorious of them. And what we are going to be teaching, I'm going to teach you the structure. I'm going to teach you the rules for that candlestick pattern. Then I'll also teach you the beautiful psychology behind that candlestick pattern and why it works. What did they say about that candlestick pattern that they say, no wonder every time this guy appears, no wonder. Yes. All right, cool. So before that, I'm going to share my screen now and I'm going to go straight into our chat. I'm going to teach you people something. I'm going to teach you guys something. This thing I'm going to teach you guys is something you must do. Now, of course, you can just find your candlestick patterns anywhere. But now, I'm saying, you want to learn, Abi? You're the one that came to class and said, oh, look, I want to learn technical analysis. Now, I want to give you the drill I give to my one-on-one students. The type of drill that we go through, that's what I'm going to give to you here. Yes, so I'm not holding anything back. So if you know that you will follow this drill, I promise you will know technical analysis. Literally. I'm talking about literally. Before this academy, I was contacted by one of my friends. She said I should come and teach her academy. I said, okay, fine. We did our contract and everything. Within the first 1 week, listen, guys, within the first 1 week, people were already placing trades. And it was candlestick patterns they were learning. So I'm going to show you too. Don't worry, you two, you see it literally. You see it literally. So just please pay very keen attention to the things I'm saying. The most important things I'm going to say starts now. Okay? I'm sure you guys can see my screen. Are you guys see my screen? So, all right, good. Let's go. Now, another thing I want to say is this, right? In as much as you're going to be able to place trades, don't overdo it. Don't rush yet. Please calm down. Calm down with me. All right. Let's learn this thing together, small. Okay. A little here, a little there, until the day we come. He's hardworking us. Yes. So please, a little here, a little there. Oh, you're surprised I have a good voice? Ah, no worry. I never see anything. All right, guys. Let's go. Let's go into our charts. And I want to show you people something now. Very quickly. I just want to show you people something before we start discussing our candlestick patterns. Okay? Very cool. Now, good. Sorry, this is my BTC chart. So I think we'll probably need a clear chart. Let's look for a clear BTC. I've used almost all my BTC, but glory to God, there's definitely one I've not used. So BTC USDT, right? .p. Let's use .p because I want to trade futures. But if I want to trade normal coins, now in fact, let's use spot today. Let me remove .p and let's use spot today, okay? Good. So let's scroll down. I don't think I've used Kraken. Let me use this one for Kraken here. So this is the one I'm choosing now. I just want to choose this one. But it's the same thing, no? Please, it's the same thing. Don't think it's something different. So this is Kraken, all right? So this is BTC. Let me see what Kraken is showing me. Okay. BTC was at 71,000 when I opened the short at fast coin. Anyways, now see. What I'm about to teach you now is the simple concept of high and lows. Somebody say high and lows. I'm about to teach you the simple concept of highs. In fact, not highs and lows. Hey, change that word. Of tops. Good. Because high and low now look like our candlestick that we learned yesterday. Top and all right, top and bottom. Okay. So top and bottom. All right. So we're going to learn simple concepts for top and bottoms. Now, I want you guys to understand something. I'm not telling you to come and look for candlestick at the beginning here. No, nothing concerns you with current market data now, right? Even me, nothing concerns me. I'm going to be teaching you people what with past market data. And because of that, right, you can easily see the top and bottoms. Now, what are top and bottoms, or what are swing points? What are swing points? When we talk about swing points, right, we are talking about, in layman terms, turning points. Can you see this? Where the market reversed to another side. Turning point. Can you see that? Turning point. Is somebody saying something? Okay. So, can you guys see my screen, please? Admin, can you guys see my screen?
Yeah, I'm here.
All right, cool. So, what I'm going to teach you guys now, I want you guys, when we are done with candlestick, when I teach you the first candlestick pattern, I don't want you guys to just find it anywhere. I don't want you to zoom your screen like this and show me, boss, see the candlestick. No. I want you to zoom out first of all. So now this is how you get your top and bottoms. Remember how to zoom out? You see this brother here? Where is that guy? Let me remove this thing. Let me move these tools from here first. Can you see this date here? I'm teaching you people now again. That is how to zoom out. So I want you to zoom out like this. Zoom out like this. Can you see? Zoom it out. If you want to arrange the screen to fit, if you want to arrange the candlestick to fit, just use your finger and drag it like this. That's all. Use your finger and drag it. There's no problem, right? Good. So you want it to fit, you drag it. That's all. But to increase the size, you use the price here, right? I've said it over and over. To increase the visibility, right? You use the date down here, right? So you see that, right? You can now fit it back into your screen with your finger. Just drag it into your screen. Okay, good. Now, when I want you to look for a top or a bottom, I want to move my line up here. Good. If I want you to look for a top or a bottom, listen, guys. I don't want you to zoom inside. No, please don't zoom inside. Please. Now, from today, if you send me anything with straight screen, I will not look at it. Yes, because now we have gotten into serious business. The other ones we have been doing before, of course, they were not that serious, but they were extremely very crucial. You will see the crucialness today. But you know what? If you send me anything that is not with a side screen like this, I will not take you serious. You're not ready to learn technical analysis yet. I will not look at it. Because like I said before, explain to me how you want to analyze your chart like this. How do you want to analyze? Show me. What do you want to do? So you want to look at just this information. Now look, you think I will come into the market. Now as a professional that I am, do you think I'll come into the market and I will look at just only this thing like this, and I will tell you what the market is doing? No. You need a clearer view of the market. Do you understand? You need to see what the market is doing. You need a clearer view. Now, is this the best that you will do? Or you now come and try to zoom in like this and say, okay, no, hey, let me see. No, please don't do that. Bend your screen sideways so that you can have a much beautiful zone. Can you see? So please bend your screen sideways. That is number one. So a top, a turning point from the upside. A top is what? It's a turning point from the upside. You see that top? That's a beautiful top. You see this bottom here? That is a beautiful bottom. You see this top? That's a beautiful top. You see this bottom here? This is a beautiful bottom. Let's go back. Let's see more. Let's just see more. I'm trying to show you what I want you people to be giving me today. So zoom out like this. The best way to see it back is to zoom out. Like when you zoom out like this, it's only perfect top and bottom should be seen. For instance, see that top? Here. See the bottom below it? Here. You see another top there? Here. You see bottom? Top? Bottom? Are you seeing them? Right? Let's keep going. More BTC has crashed though. Kai, BTC has crashed too much. If you look at this one too, you see more. Can you see this beautiful bottom? Can you see that beautiful top? Now, am I saying that there are no top and bottom inside these places here? They are, but we want to cut the big move. What do you want to do with trading, my friend? Is it not money you want to make? So if you want to make money, what do? We cut the big moves. All right? We're not here to be looking for small moves. No, we want big money. So we have to cut the big moves. Do you understand? Good. So look at that top. See this bottom here again. Another beautiful. You see it? You see how long it is? It's a beautiful bottom. See another top here. See another beautiful bottom. All right? See another top here. See another beautiful bottom. So you don't have to stress yourself and be telling me, but this is a top and a bottom. I don't even know why that. I don't want to know why that thing was a top or a bottom, right? All you just have to do is just come back, zoom out like this. You will see it yourself. Because it's past market data you are using. The thing is already there. So you cannot, don't worry. When we get to market structure, you understand why all these things are tops and bottoms. Do you understand? But for now, we are beginners. So let's just use, because it's local, let's just use our local thing and say, okay, no, see, I can see a turning point. You are not a blind man. I can also see a turning point. I can see another turning point here. Beautiful one. See another one. Yeah, I'm not blind. I can see it. Can you not see it? So once you zoom out, you can easily see them. Finish. You come down here. You see another one. I can see that top up there. You see that one there? See bottom now. Now bottom be this now. Is this not bottom? Is this not top? Because the market moves like this. See, market moves like this, right? So this is top. This is bottom. This is top. This is bottom. That's all. Okay? But I don't want you people to zoom out your screen like this and come and be showing me candlestick patterns like this. No. Many of you are doing your assignments, bar. The way you are doing your assignments, bar, is to just show the teacher that you know what you are doing or that you know what he said. I'm not teaching you to tell me that you know what I said. I know you know what I said. I want you to show me that, yes, I am learning as you did. Yes, I want you to do according to what I did. All right? Not showing me what I said. Because, for instance, now, if we're talking about the candlestick pattern, now somebody can come and this is the candlestick. You can come and screenshot this thing and say, boss, look, a market fair. Then the person will now legitimately send this thing to me and tell me, boss, look at the candlestick pattern. That's not what we are dealing with here today. Okay? The only way I want you to get the candlestick pattern, first of all, zoom out. Zoom out like this. Then if I say get me an engulfing bar, get me a pin bar, these are candlestick patterns name. Don't worry, you learn them. You come, you check for the top, you check for a bottom, you check for a top, you check. Once you see the top here now, what you're going to do is this. You will now zoom to that top. Can you see? You zoom to that top and say, okay, wait, is this candlestick here? Do you understand? If it's not at that top there, you will come out. What do you do again? You zoom out again. All right? You will now check the bottom. I say, let me check. Is this candlestick here? Look at the bottom here. Is it here? You finish, you zoom out again. You check here. You say, is it here? You know, there are two bottoms here. There's another bottom here, right? But this bottom is also what led to up there. This bottom is also what led to up there. So it's the same thing. You can now zoom in and say, okay, wait, is it here? Is it around here? Hey, look at it here. Wow. Then you now come and screenshot it. This is the way you screenshot it. You bring it out small. Let me see that. Okay, yes, the thing actually caused a reversal. So let's leave that for now. All right, let's get into candlestick patterns 101. Now, somebody has asked the question in his mind, and I want to talk about it very quickly. They asked me, boss, what do you mean by a reversal? It means the market was going in a particular direction, and after the candlestick appeared, markets changed direction. Do you understand? Market was going in a particular, now look at this one too. Market was going in a particular direction. Bam, we're seeing market going in this direction. Then candlestick pattern forms, and the market reverses. You know reversal now. You know when somebody's coming to your house and you're like, Baba, reverse, they go your house. Or do U-turn, they go your house. Good. That is a reversal. Okay? That, my friends, is a reversal. All right? So keep that at the back of your mind. And no, shall we? Beautiful. Beautiful. So, first things first. The candlestick pattern we're going to be discussing is called the engulfing bar. In fact, wait first. Whoa, show. Wait, relax. Before we talk about the engulfing bar, I want to introduce you to the concept of what bullish and bearish candlestick patterns are. Bullish and bearish candlestick patterns. Okay? Yes. So there are bullish candlestick patterns and there are bearish candlestick patterns. There are bullish candlestick patterns and there are bearish candlestick patterns. I want to give you very important criteria. So listen carefully, very carefully. A bullish candlestick pattern, write this down, please. Write this, everything I'm saying down. As I'm talking now, and just start writing everything I'm saying. A bullish candlestick pattern, must, you hear that word? Must be found at a bottom. We just discussed top and bottom now. Relax. Must be found at a bottom for the bullish candlestick pattern to be useful to us. It must be found at the bottom, meaning market must have been crashing and got to a particular bottom. This is the only place where bullish candlestick pattern is important to us. Why do you think so? It's because we can only go up from down. What does bullish mean? Up, Abi? Upwards. We are moving up. We are advancing upwards. So every bullish candlestick pattern that I will teach you must, you are hearing must, Abi, be found at a bottom. It must be found at a bottom for it to be useful to you. We can find it anywhere else. No. Listen to me. Somebody has asked that question in his mind already. We can find it here. We can find it here. Along the way, we can find it here. But the only place where...
Switch. There is nothing showing on your screen, or no candles. Just a
really?
plain white screen. Yeah.
Yes. I'm the one who put a plain white screen.
Okay.
But you see the arrows? Are you seeing the arrows?
Yeah, we can see the arrows.
Okay, yes. So I'm the one who put the plain white screen because I'll need to draw out the candlestick patterns.
Oh, it's okay.
Yes. So now, the only place where a bullish candlestick pattern, please, I did not say bullish candlestick. I said bullish candlestick pattern. Now we have entered candlestick pattern. We don't leave candlestick for back. So the only place a bullish candlestick pattern will be important to us is at the bottom. Why, you ask? Because are you hearing the word bullish candlestick pattern? Meaning that from there we want to go what? Up. That means the candle should be leading us up. How would you be going up from up? You can't, right? We can only go up from bottoms. We can only go higher from bottoms. We can only go upper from bottoms. That is why a bullish structure or a bullish candlestick pattern must be found at the bottom. I said must. Please, must. Very simple. Very simple. Number two, Number two, very important thing about the bullish candlestick, about bullish candlestick patterns. Bullish candlestick patterns, if we want to trade bullish candlestick patterns, or if we want to represent our trade on bullish candlestick patterns, we must use the long position tool. Now you're seeing how all those things I'm teaching you are important now, Abi. We must use the long position tool if we want to represent our bullish trade. So if I saw a signal here and I want to enter, I'm going to use long position tool. Why? Because long position tool is a bullish tool, right? It's used to show us that the market is going up. Our TP level is upwards. So we will use long position tool for bullish candlestick patterns. We use long position tools for bullish candlestick patterns. We use long position tool for bullish candlestick patterns. You go? So put that down. Keep it there. All right. Keep it there. Keep it there. That's number one. That's number two, I think so. Yeah. So that is for bullish candlestick patterns now. For bearish candlestick patterns now. All right. For bearish candlestick patterns. Wow. 838. For bearish candlestick patterns. Right. Now, right. A bearish candlestick pattern must be found at a top. A bearish candlestick pattern must be found at a top for that candlestick pattern to be useful to us. It must be found at a top for it to be useful to us. Why, you ask? Because it is only from the top. It's a bearish candlestick pattern. So when you hear the word bearish, it means that it makes the market to crash. Where do you, remember I told you are looking for big money. So where do you want to enter the best with a candlestick that will make market fall? Is it not from the top? You want to catch it from the top so that what? Market can crash from there and you make money. So the only place that it will be important to us is where? At the top. Now, I will answer that question again because someone is asking it again. Does that mean that we cannot find it at the bottom or we cannot find it at the middle? No, we can find it anywhere. We can find it what? Anywhere. Are you getting me? We can find both bullish and bearish anywhere. But now we are talking about where this thing go important. Where will it be useful to us? That's what we are saying. We are saying what? It is only at the top. And I will literally show you people these things I'm saying. All right. I'm not just speaking. I will show you people these things I'm saying. Okay. Good. So beautiful. Now we're done with that. All right. Let's keep that aside now. Let us discuss the engulfing bar. Beautiful. 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 So I'm going to draw out an engulfing bar while I'm explaining some things to you. Now, when you hear the word engulfing, what does it necessarily mean to you? When you hear the word engulfing, what does it necessarily mean to you? It basically means something overshadowing another. I think that's the simplest terms. And those of you that are very prayerful people here, you know, there's a point to get to where the sweetness of the Holy Ghost will begin to worry you very well. And you begin to shout, Holy Ghost, engulf me, engulf me, engulf me. I'm sure you have gone to that position before. I have. I've been there. All right. I've been there. Okay. So you will pray so much, you'll be shouting, engulf me, Holy Ghost, overshadow me. Do you know what that means? Some of you don't even know what that thing means. But the sweetness that was coming from that prayer is what was affecting your brain. You don't know what that thing means. It means that this being should completely swallow you up. Are you getting me? It should completely swallow you up. You want to be swallowed up in that beauty. Yes. So when you're talking about an engulfing bar, we are talking about a candlestick pattern that one completely swallows the other. Now, don't worry, I've not started giving you the structure, please. We're talking about a candlestick pattern that one completely swallows the other. Don't worry. First of all, structure, right? First of all, structure. Second of all, rules. Then third of all, the psychology behind that candlestick pattern. And then I'll show you how they work in the market. Okay? Calm down. Small, small. Let's go small, small. Okay. Now, right. A candlestick pattern, sorry, an engulfing bar candlestick pattern, the engulfing bar candlestick pattern, anyone you want to write, all right? The engulfing bar candlestick pattern is a two candlestick pattern. Is a two candlestick pattern. What does that mean? It means that it comprises of two candles. There must be two candles for an engulfing bar to be formed. Do you understand? Layman English now. All right. What does that mean? There must be two candles for an engulfing bar to be formed. All right. There must be two candles for an engulfing bar to be formed. Okay. There must be two candles for an engulfing bar to be formed. That is rule. That is number one part of the structure. Number two, the two candles of an engulfing bar must be of opposite force. Just write it down. Calm down. I'll explain. The two candles of an engulfing bar must be of opposite force. Meaning, one must be bullish. Now, so write this thing. That is, so i.e., one must be bullish and one must. Please, I'm begging you, listen to how I'm using must rather than should. I'm using must. When you hear the word must means this thing. There is no other alternative. That is the word must. That's what it means. Okay? So write i.e., one must be bullish and one must be a bearish candlestick. Glory to God. Beautiful. Beautiful, isn't it? Yeah, I know. I know it's beautiful. Relax. We're not getting there yet. Let's keep going. Calmly, and softly. The next thing now is the first candle of the engulfing bar is the smaller one. The first candle of the engulfing bar must be smaller. The first candle of the engulfing bar must be smaller. The second candle of the engulfing bar must be at least 2 times as large as the first candle. Wow, Ladeo. No. I think we should change that word there. We should change that word. I'll explain why. Right? So the first candle must, now we are using must, be smaller. All right. The second candle should be at least, so should. All right. So there are possibilities that it might not, but at least engulf them. But the second candle now, for a good professional trader to trade an engulfing bar, the second candle should be at least 2 times the size of the first candle. Okay, at least 2 times the size of the first candle. All right, at least 2 times the size of the first candle. Okay, guys, good. Beside because of that nonsense advertisement, right? I think that's number 2. Yeah, that's number 2, right? So good. Now, let me see. What else is very important? Good. Now we're going to go into the bullish and the bearish engulfing bars now. And I'm going to talk about them. For the bullish engulfing bar, remember, we first of all we have quantified and we have qualified and we have said that the engulfing bar comprises of 2 candlesticks. That's number 1. We said these 2 candlesticks are of 2 opposite forces. That is number what? That is number 2. Now we are saying that there must be of opposite force, right? And we said the first one is smaller. right? And the second one should be at least 2 times the size. Okay. Now, for a bullish engulfing bar, write that down. For a bullish engulfing bar, the first candle must be bearish. Write it down. The first or the smaller candle must be bearish. The first and the smaller candle must be bearish. The second and the larger candle must be bullish. For a bullish engulfing bar. So we're not talking about just the engulfing now. We are talking about the bullish version of the engulfing. So the bullish creation of the engulfing. How does it, what is the system? How does it look like? What is the structure? We're now saying for a bullish one, right? For a bullish one, the first candle must, and the smaller candle must be bearish, right? And the second one or the larger candle must be bullish. Write that down. Another thing we want to also talk about the bullish engulfing bar is the fact that since it is a bullish candlestick pattern, where do we find it? Answer it in your mind first. At a bottom. Where do we find it? At a bottom. For it to be useful to us, we have already come to terms with that thing. We said that thing up there. We said, okay, for bullish candlestick patterns, the best place to find them that it will be useful to us is where? At a bottom. Okay, good. So now that it's a bullish candlestick pattern, does that change the rule? No, it doesn't. So the best place to find a bullish engulfing bar is at a bottom. Write that down. Write it down. Yes. The more you write this thing down, over time you get used to it. You already know. I wish you guys' mic would be unmuted so that people will talk, but people are very noisy people. Now go make noise. Hey, before you know, like 70 people have opened their mic. You don't know how to control it, all right? But now, I'm sure you're getting it, right? So the first candle must be bullish, right? Sorry, the first candle must be bearish, which is the smaller one. The second candle must be bullish, which is the larger one, right? It's found at the bottom. For it to be useful to us, it must be found at the bottom. Number 3. It's the same thing you wrote up there, but I'll say it again. For us to represent our position, right, of a bullish engulfing bar, we must use the long position too. Why so? Because it is a bullish candlestick pattern. Please, it is what? A bullish candlestick pattern, meaning that it is, when we see it, it will reverse the market to the upside. And I will tell you why. Don't worry, relax on me, bro. I will tell you why. So when we see it, it should reverse the market to the upside. So that's why we use long position to show, okay, look, this is my position for this engulfing bar. Do you understand? Long position, like we said, is used to show what? It's used to show upward moves, right? Good. Let me see if there's anything I'm supposed to say about this any longer. Good. So basically, once you find a bullish engulfing at the bottom, it normally reverses the market to the upside. So you can write that down. If you find a bullish engulfing bar at a bottom, it normally reverses the market to the upside. Somebody has asked me what engulfing I'm talking about. So let me try spelling it as easy as possible. So this is engulfing. Engulfing. Just be asking your question in your mind. I will shock you. I'll be reading it. This is engulfing, all right? The engulfing bar. Okay, guys, please, let's do that. So now, good. Now that is for what? The bullish engulfing bar. So if you are looking at this structure now, if I wrote A here and I wrote B here, I wish I could see what your answer would be. Which one would you think the engulfing bar would be? The bullish engulfing bar would be? To be very simple, right? It will be B. Why? Because first of all, the first candle is the smaller one, is bearish. The second one is the larger one and it's bullish. And where do we find it now? We find it at the top, at the bottom, right? Then we can open long positions. Simple, Abi. Hey, don't worry, I'll tell you why. I'll tell you why this candlestick is so beautiful. I will show you the glory. Relax. Let me show you the glory thereof. All right. So that's that. Good. Now, right. You go right there. For the bearish engulfing bar now. So we are finished with bullish, brother. For the bearish engulfing bar, For the bearish engulfing bar, the first candle must be bullish. The first or smaller candle must be bullish. The first and smaller candle must be bullish. The second and larger candle must be bearish. Listen, the second and larger candle must be bearish. Can you see it? The first candle bullish, the small one. The second and the larger candle bearish. So this is the engulfing. That one candle comes and swallows up the last candle. That is what you mean by the engulfing bar. A bar that comes and overshadows the last candle. And I will tell you the mystery behind it. Just listen to me carefully. All right? So number two thing about the bearish engulfing bar is the fact that we must find it where? Where are we going to find it? Answer the question in your mind before I answer it. Where are we going to find it? Okay, so plenty of you are talking top. All right, that's good. That's good. So we must find it at a top. We must find it where? At a top. For what? For it to be useful to us. A bearish engulfing bar must be found at a top for it to be useful to us. A bearish engulfing bar must be found at a top for it to be useful to us. Number three, if we were to represent our position to someone, we will use the short position for a bearish engulfing bar. Why? Because it reverses the market to the downside. And what does short position to show? Market decrease in price. Now I'm not showing, I'm not giving you guys this thing now. Wait, I'm not telling people this long position and short position too, so that you must use it, No. Okay. But for people who want to go extreme, they can use it. Yes. If, for instance, I'm telling you how I do a rigorous training for people, right? If you are doing rigorous training with me, you must put it. Yes, you will cry. You must put it. You put rubbish, I will look at you. I will tell you that you put rubbish, you will go and do it again. Okay, but for now, since we are just basic beginners, we can just play with at least the first two candlestick patterns that we'll learn, right? We can just do it normally without the long or short position too. Then for those of you that can put long or short position too, of course, I'm going to be putting it so you will see how I'm putting it too. All right. Then from tomorrow, next tomorrow, like that, you can try to put it yourself too. All right. There's no harm in trying. I'm not going to laugh at you. I'm not going to insult you. Have I insulted any of you? Hey, I'm not going to laugh at you. I'm going to only correct you. To stress me, but I'll correct you. That is all. And it's good if you just get corrected and then you know that, okay, no, this thing I did was wrong. I feel so happy when I know that what I did was wrong and somebody's correcting me. That's all. Okay, good. So for a bearish engulfing bar, if we want to open a position, we use a short position to simple and short. All right. Basically, once we find a bearish engulfing bar at the top, it reverses the market to the downside. Once we find a bearish engulfing bar at the top, it reverses the market to the downside. Is that gotten? Is that clear? Good. So now let's talk about the psychology. What is the psychology? So now basically the only rule that we talk about when we're talking about the engulfing bar is that rule that I gave you guys. If you want to see a perfect engulfing bar, just find one. Find one that one of the this thing. Find one that the smaller candle, right? The larger candle is at least twice the size of the smaller candle. You will see magic that day. You will see.
Switch.
Yeah.
Switch. They're saying you are too fast. I don't know if you are, or I don't know if you can slow down a bit.
Oh, wow. I should go slower than this. All right, fine. Sure. So, like I said, we are done with that, right? So, like I said, if we are talking about the rules of an engulfing bar, right? I already gave you guys the rule. I said if you want to find something that is perfect, you want to find the perfect engulfing bar, just mistakenly find one. Find one whereby the larger one is at least twice the size of the smaller one. Once you find that, remember there must be opposite forces. Please, there must. I said must there. I hope you wrote it in your book. There must be opposite forces. And I have said it before again. If you came to this class without book and pen, leave this place, because I swear you will not let technical. You say I'm swearing. You will not let technical analysis. Okay, let's not stress ourselves. So you can go and do what you find most important to do, right? But as long as you're in this class, I say all the things I'm saying that I need you guys to write down very calmly so you can put it down in writing. Okay, when you put it down in writing, it's easier for you to revise and remember. Say, oh, Switch said this thing, Switch said this thing, rather than watching the entire video again. Do you understand? Good. So if you find an engulfing bar whereby the larger candle, the larger brother here, right, it's at least twice the size of the smaller one. As you can see, this is the smaller one here, still the smaller one here, right? Twice the size of the smaller one. That guy is a perfect engulfing bar. Okay. Now, first of all, what is the psychology behind this brother? What makes the engulfing bar so powerful? What makes it so that the engulfing bar, if you find the bullish engulfing bar at the bottom, it can turn the market to go upwards? Why? What makes it so that if we were to find a bearish engulfing bar at the top, it will make the market to fall down? What is the psychology? What is the mystery of the engulfing bar? Now, I want to first of all tell you people that as I'm saying, reversing the market, it's not a must. Are you getting me? It's not a must. There is nothing on earth that is 100% sure. Nothing. Believe me, I know how life works. I used to play with life like this. I know how life works. So yes, I am telling you that there's nothing that is 100% certain. Okay, so even with candlesticks, yes, you can see them sometimes and they will hit your SL and maybe still probably even go to where you wanted it to go to. Yeah, but the accuracy is very high. This is price action you are learning. I'm sure you have learned it. You have heard that word before. Probably heard it somewhere. Somebody talking about price action, smart money concepts, mechanicals, ICT, right? All those places English. This is price action. After price action, we go to market structure. All right. So let's discuss price action very diligently. Now, what is the psychology behind the bullish engulfing bar? So now, before a bullish engulfing bar is formed, of course, the market must have been what? Crashing. So let me give you a very clear example. So market was what? Let's say market was crashing like this, right? We had market crashing, right? Then we had this small candlestick appear here. Listen, this is a bottom. Say this was a bottom, right? And then this brother now appears. We now see a bullish engulfing, a bullish bar that engulfs the last bearish candle. Now, what does this tell us? I will explain to you. And from there, you see the market go to this way. What does this tell us? Now, I hope you know that this thing is selling pressure. I hope you know. Remember, these are bearish candlestick. Market is crashing. Bitcoin is, let's say Bitcoin is moving from 156,000 down to 144,000. Market is what? Crashing. So there is constant decrease in price. There is selling pressure in the market. Right? So we're having last candles, selling pressure, right? Until we got to the last small candle. The candle now decreased in size. What did we say yesterday? Just yesterday. What did we say about small or short candlestick bodies? It's a what? It's a decrease in pressure. We said it is what? Small selling pressure, right? A short bearish candlestick body represents what? Small selling pressure. Are you getting me? Now, a bullish candlestick now appears and overshadows the last candle that appears here. I want you to see something. No, I want you to get something. This thing is distracting me. This card is distracting me. I want you to understand something. That every candlestick that you see here, you see this thing, is pressure. Do you understand? No matter how small, no matter how large, it's what? It's literal pressure. Do you understand? It's pressure, right? So we now finally have, all right. So let me move that back. Let me just do the small one here. So we now finally have the small one there, right? So that means that pressure is already decreasing in the market. Pressure was decreasing before we got to what? To this bottom here. So pressure was decreasing. There was a decrease in pressure. This is high pressure, of course. This is a long real body. All right. High pressure, good selling momentum. Then pressure decreased, meaning that the sellers were getting weak. The selling was getting what? Weak. Although the selling did not disappear, but it was getting what? Weak. Then something came. An opposite force came, and that opposite force did not just enter the market. What did it do? It completely overshadowed the last what? It completely overshadowed the last selling pressure. So this is the last selling pressure that occurred in this market. Look at it. This small one here. It was the last selling pressure. But guess what? Something happened. Something happened. A larger opposite force candle appeared. Now, for this candle to appear, it means that buyers have completely swallowed up the selling pressure. Because this is a long bullish body. And what does a long bullish body represent to you, my friend? We spoke about it yesterday. We said a long bullish body represents what? High buying pressure. So basically, the buying pressure was so much that it swallowed up the selling pressure, just like how the fish swallowed Jonah. It swallowed up what? The selling pressure. So it means that buyers are now in control of the market. Buyers have now taken control of the market. Then boom, they continue buying. So this is what candlestick patterns are talking about. Those people sat down and they said, look, every time the candlestick now becomes small like this, let me remove all these things, please. They said every time the candlestick we come to a particular maybe support and resistance, supply and demand, order block, fair value gap zone, whatever, right? They say every time we come there and this guy now decrease, pressure now decrease, all right? We understand that, okay, candlestick has now become small. And another large candle now appears after it. Market normally goes up. So they were studying it and they were saying, what does this thing mean now? What is the psychology? How will I understand what is happening? And now I'm explaining it to you. The pressure was good. The pressure was good. The pressure was good, but the pressure decreased at some point. But there was still pressure. Sellers were still in control. As long as there is a bearish candlestick, sellers are still in control. All right? As long as there is a bearish candlestick, sellers are still the ones in the market. Then something happened. Buyers did not just come and buy. They bought and created a candlestick that was 2 times or even 3 times, but was larger than the last selling candle. Where? At the bottom. Where? At the bottom. So that means the buyers now have swallowed up the sellers. They swallowed them up. Boom. As they swallowed them, they say, we are now in control of this kingdom. They began to push the market to the upside. That is the psychology of a bullish engulfing bar. Is that selling pressure decreased? Buyers came and swallowed up the selling pressure. Swallowed it up. I even showed their presence. We are here. And then from there, they continue, the market moves to the upside. That is why a bullish engulfing bar found at the bottom reverses the market to the upside. Yeah? Simple, Abi. It's very, very simple. Very simple stuff. Go. Very simple stuff. All right? So, like I was saying, right? Now, see it again. So, this is selling pressure, right? So, we have good selling candles. I will show you literally in our chart, all right? But for now, let's just play with this one. We have good selling candles. We now come to, let's say, a support level. And from there, something now happens. Although our selling pressure has now decreased because of the small candle, but at least now still sell now, right? It's still a sell candle. So sellers still do this market, right? Sellers are still in this market. Then boom, something happens. A buy candle now appears. And this buy candle does what? Completely swallows up that last bearish candle. It swallows it up. So that means buyers came into the market, they swallowed up the selling pressure, right? At this level here, they swallowed up. At this bottom here, they swallowed it up. And they became in control of the market. And boom, market moves to the upside. That, my friends, is the psychology of the bullish engulfing bar. What about the bearish brother? Oh my God, I've mistakenly pressed the wrong part now. It's going to take me somewhere else. Yeah. So what about the bearish brother? What does his own mean? It's just the opposite of the bullish, and I'll explain it very simply. So first of all, there was what? Good buying pressure. All right. So good buyers were buying. Oh voila. Buyers were buying. Then it got to this point. Then maybe let's say we got to a top now, right? So we got to a top, maybe a resistance level, right? Don't worry, you understand all these things. This resistance and support I'm talking about, you understand it later on. Let's just play with the simple ones first, all right? Good. Then something happened. As the pressure decreased, showing the sign that what? Said buyers are getting weak. This pressure decreased. If pressure decreased, let me explain something for you. Let me give you in simple terms, right? If help me, Jesus. What do I use? If you were to what is it that everybody does? Let me see. What is it that everybody does? Oof. If they said you should pack blocks, right? Or let's say they said you should push a car, right? You know you can continuously be pushing that car. Let's say you have strength, right? And you're pushing the car, right? At the start, the energy you will have at the start is not the energy you have at some point. I hope you know. You will get tired at some point. Now, when the pressure you are exerting on that car, that pressure that you are using to push at the beginning is not the same pressure you are using to push 1 hour later. I hope you know. So what is happening? The pressure that you are exerting on that car is reducing. And when that pressure is reducing, that means that your hands are getting weak. What does it mean? Your hands are getting weak. You are getting tired. So when after good bullish move, right? A bearish, a small, the candle now started getting small. The other thing is telling you that look, at this particular point, the buying hand is getting weak. The buying hand that was used to push the market is now getting weak. The buying pressure in the market is now getting weak. Then something happens. Let's say you're pushing it against somebody that was trying to reverse the car. You have super strength, right? The person that was now reversing the car now reversed so much above the pressure that you're using to push it. What do you think is going to happen? Very simple. The guy will crush yourself. He will crush you. You just die. Yes. He was trying to reverse it before, but you had strength and you were pushing. Then your hand started getting weak. As your hand started getting weak, something now happened. He now that throttle. He matched down, right? He matched his gear. He matched it. He was now able to what? Completely overshadow your last pressure. That your last small strength that you have in your hand that you are using to push. He now overshadows it. Hey, what do you think is going to happen from there? Do you think you're still going to be able to have a stand to push that car? No. The market will start what? Dropping. That is what these engulfing bars are. That's what they are saying. Is that look, market is bullish. Wow, we are seeing bullish moves, right? Then we get to a top, and then the small candle forms. It's still a bullish candle. No, we have not changed though. It's still what? A bullish candle, but it's small. That small now, what does it represent, my friends? It represents what? Low buying pressure. We discussed this thing yesterday. It represents low buying pressure, or it represents low buying momentum, or it represents the buyers getting weak. Then guess what? Sellers now came and did what? Completely overshadowed the last buying pressure. So when they engulfed the last buying pressure, they swallowed it up. The next thing, sellers were now in control of the kingdom. And from there, the market it crashed. Okay? Beautiful. Now I've spoken too much. I don't like talking very much. I've spoken too much. Now let's enter our chart. Let me show you literally what I am talking about. I was teaching engulfing bar to some students recently. and I used it to open a particular position. I wish I used to keep my positions, but I don't. And it was on BTC exactly. So I'm going to show you exactly where I opened that position. Where did I open the position? Let me show you where I opened that position. Very good. Was it here? I think it was. Okay, yes, it was on this move. It was on this move here. Right. This is where I opened the position. Now let me show you where I opened the position. See this bottom here? Now let me show you that's an engulfing bar. See, let's zoom in so that we can see it clearly. Ready to go? Can you see an engulfing bar now in real life? The first candle must be bearish. It's a bullish engulfing bar at the bottom. So the first candle must be bearish. The second candle must be larger, must be bullish. From there, market reverses to the upside. Now I open this position. No, this was where the market was that day. I opened the position here, literally live class for them. Live class, let them see. The next day I showed them full TP. It was all from this engulfing bar here. But let's leave that now. Let's go back to our previous market data, right? Good. So you can see a lot of engulfing bars already in this market. There are plenty of them. Now look at this bearish engulfing bar here. Let me show you now. See. The first time, so see now, watch something, guys. Let me even ask something. See that this thing has good pressure here now. It has good pressure. There's good buying pressure there, isn't there? Then see this small candle. What is this small candle telling us? Hey, small candle is telling us something. Because so imagine after all this big candle here, we now come and see this small thing. That means there has been a decrease in the pressure of buyers. That means that the buyer's hand is getting weak. And since the buyer's hand is getting weak, something is going on. Something is going on. What is going on? Sellers are playing. They are playing their game. Then guess what? A red candle now appears. A bearish candle. Larger than the last what? Bullish candle. Are you seeing what I'm saying? All the things I've been talking since. You see, I'm having a bearish candle now appears and engulfs the last small bullish candle. That's the last small bullish pressure. And bam! Market crashes. Let's see that for ourselves. Market does what? Crashes. Don't worry, let's keep looking at examples. I'm going to look at examples before I show you how to open positions on them. All right, let's look for more examples, more examples, more examples. Now, please watch this thing. Now, somebody's going to look at it and try to tell me that this is an engulfing. This is not an engulfing, but I hope you can see. The second candle, we said must be larger. Please don't rush to do your assignment this night. I don't like that thing that before I even drop assignment, if somebody don't rush, don't go down. Don't rush to do your assignment first. Relax. Read your book. Read all the things I'm telling you so that you do your assignment more correctly. Okay? Don't rush. Nobody's rushing with you. All right? We're not fighting, my friends. We're not fighting. Just give me a moment. Let me check something very quickly. All right. So I opened the position earlier on Fatcoin. Very good. I opened the position earlier on Fatcoin, right? I opened the short position, right? And yes, so this was a short position I opened on Fatcoin now. This is a top, all right? Now watch something. I opened this position not because of I saw any price action, but guess what? An engulfing bar has appeared here. Look at it. You see that small candle? You see it? Now watch something. See big bullish candle now. Good bullish candle. Then see the small one. Where did the small one come from? That small one represents that pressure is getting weak. And then see the other things that even show itself again. Other things that showing signs that sellers are in this market. See weak, long weak is appearing. Long shadow. Then see a larger bearish candle now engulfs the last buy candle. Now watch what will happen to Fatcoin. All right, let's watch what will happen to Fatcoin. You most likely see that by tomorrow, market should have dropped to this level. You see it. Yes. Most likely I've dropped to this level. This is the level that I was planning to open long before you went to my TP and no wala. I'm watching it. So now you see that. Now this is a live market. I wanted to check that. This is a live market now. Let's see what goes on. Okay? Let's see what goes on. All right, let's get back to our BTC boy. There are too many. Good. See BTC now again. Ayala mata. BTC now has opened another one. See BTC. You see this bullish engulfing bar here? See that brother? Right? I'm sure you can see it's an engulfing bar. Here. So if I wanted to enter it, I'll probably wait for it to come and retest the engulfing bar at the middle of the engulfing bar here. Don't worry about that. I'll tell you that. So I don't want to try to open a position here so that we'll check something out. All right. Then I would have opened the position at this level here so that when it comes to retest this level, it can now go up from there. Most like. So yes. But anyways, let's keep looking for engulfing bars now, shall we? So I can zoom my screen out like this so that I can get good top and bottom fresh company. This is a good bottom. That's a good top there. Good top there. I even see an engulfing bar up there. Good bottom. I think I see. Okay, I don't see an engulfing bar down here, but I see one here. All right. That's a very perfect engulfing bar up there. And look at this. Now, what was the criteria I gave people for a perfect engulfing bar? The size of the real bodies. Look at this. They're good because somebody asked the question in his mind now. He asked, is it weak or the real body good? The size of the real body I'm talking about, yeah? Because it's real bodies that show us pressure. It's not weak. When you begin to go further and advance, you now know how weak will show you pressure too. But for now, I beg, it's real bodies that show us pressure. All right, good. So see this, see that in there. If you carry that candlestick and put inside this bearish candlestick here, it will appear more than 3 times. So that is a perfect engulfing bar. And that's the reason why, as you can see, it works so miraculously. Don't worry, I'll tell you how to enter it. Already at 9 o'clock, Abi. 9:18. You would not tell me, oh. Let's keep going now, shall we? All right. Let's do very quickly now. So I'll show you how to enter it. Okay. So let's go back and let's see more engulfing bars if you can find them. So let's zoom out so I can get my top and bottoms, right? So good top, right? From there, look at this crash. This is a good top too. From there, look at this crash, right? So let's look at those tops too. Let's look at them. So we'll zoom inside. Right? We'll zoom inside to see if we can find the engulfing bars there. We didn't find there. Let's come up here. We didn't find yet. So we'll zoom back outside. Good. So look at another one here. We didn't find yet too. All right. So I'm just zooming out and zooming in just to see if I can find engulfing bars. All right. So yes, but don't worry, engulfing bars appear so too much in the market itself. You'll not be able to finish it. So now somebody will ask me something now. I want to show you something. Somebody will ask me, but boss, is this one not an engulfing bar too? But guys, see, what's the first criteria we said about engulfing bars? The two of them must be of opposite force. So you cannot have buy and buy at the same time. And besides, this is a top, so it's bearish one we're looking for. Of course, good and fine. And this one looks like a bearish engulfing bar, right? But this candle that came before it is also bearish, so it cannot work. All right, please. I'm just asking some of these questions now. So let's look for more engulfing bars. Now that's where I will show you my entries. I think I should have shown you people entry before we started looking for more of themselves. Yeah, but no wahala. There are plenty. Don't worry, relax. There are plenty. There are plenty. Can you see that there? You see that? Let's zoom in so that I will show you more better. Right? You can see last candle bullish, smaller. Next candle bearish, larger. You dey get am? You dey understand me? So how do we make entries now? How do we make entries? Right? How do we make entries? Very simple. Right? So how do we make entries? Good. Now carry your short position too, because that's a bearish engulfing bar at the top. See, I'm saying this thing over and over, right? That's a bearish engulfing bar at the top. All right. That's a bearish engulfing bar at a top. All right. Good. Carry your short position too. Come to, you see where the engulfing bar close. So you enter where the engulfing bar close. That is the best method of entry. The first method of entry is called the aggressive method. Aggressive means literally in every market. It means that once the thing just close, you enter bam. You do not care. You entered immediately. All right. That's what the word aggressive means. All right. You get me? That's what the word aggressive means. Okay. Good. So immediately the engulfing bar closes there. Immediately it closes there. You will now place your entry at that point. Now see, place it there. Now remember, I told you guys, I made you guys a promise. I said I will show you how to put stop and everything, right? Let me show you now. On every price action, on everything I'm going to teach you, your stop loss should come a little bit above or a little bit below. Now watch this. This is a little bit above. Now watch this. Let's come inside. Let's come inside. I see I'm putting my stop loss a little bit above the bar. I see it a little bit. I even put it a little bit above this week too. So in case the thing went mad, so you see, I put it a little bit above. That's how to set a stop loss for an engulfing bar, a little bit above. Good. Now, somebody's going to ask, boss, what type of risk to reward ratio can we target? I know now you people are very intelligent. You people are asking all those questions. Now, good. You can use a 1:2. So you can use 1:2. You can use 1:3. If you want to go extreme like the switch, you can use 1:4 or 5. All right. So 1:2 for us that we are beginners, 1:2 is okay. 1:3 is also very fine. 1:3 is perfect, in fact, right? 1:2 is okay. 1:3 is perfect. All right, guys. So please note that. So as you can see, what's the risk to reward you are seeing here? 1:2.11. So 1:2 there is fine. Okay, 1:2 there is fine. So yes. Now let me show you what an engulfing bar can do. Let's target very massive levels now. Watch. This 1:5. And this is the method of aggressive. Now, I will show you a method that is safer. If you, as a beginner, you want to be more safer, I will show you the method, the second method. All right. But now, watch where that guy stopped. See where that guy stopped. That is 1:7 risk to reward ratio. You don't know what this thing means on BTC. Let me show you. Your entry price was what? Remember, I will use our long and short tool now. Our entry price was 104,000. Abi, our TP is 82,000. I can assure you that is over 3,000 to 4,000% if I'm using a 100x leverage. Yes, and those are the type of moves that I used to catch. Yes, I'm just a very crazy person. Takes a lot of study though. Takes a lot of study. But as a beginner, 1:2 for us is fine, or 1:3 is also very fine. And we'll hit our 50 and we're out of there. Go. So very simple, very simple. So that's the bearish engulfing bar we entered like that, right? So that is the first method of end. Somebody's asking me is it just for bearish engulfing bar that we enter like this? No, guy. No, bro. We use it for both bullish and bearish engulfing bar for every candlestick pattern. Both bullish and bearish. This is the way we enter aggressively, or the second method I'm about to teach you now. Okay. Good. So how is the second method like? It's not going to work for this particular engulfing bar, but I'll show you what I mean. You carry your trend line tool, right? Carry it to the middle of the bar that engulf, right? You see that long bar. Carry it to the middle. Now, this is very useful for when the engulfing bar is very long. When the engulfing bar is very long, your stop loss is going to be too long if you put it a little bit above or a little bit below, right? So it's going to be too long. So the best thing to do is to enter at the method called the method of retest. So you put it there, you stretch it out like this, right? You straighten it out, right? Remember how to straighten out, right? Use this angle here. So once you straighten it out there, right, then you can now open a short position. Okay, you can now open a short position. My phone is about to dissect. So you put it a little bit above the engulfing bar. Still, your stop loss will be a little bit above the engulfing bar. Here must be a little bit above the engulfing. But now you see that my stop loss is way smaller. Right? My stop loss is very small. If I were to use the main entry that we use there, you see the main entry that we use there, Abby? And I put my stop loss a little bit above there. Let's say I put my stop loss a little bit above there. See, my stop loss will be at minus 400% if I'm using 100x leverage. Yeah, that's me how I know. I've studied it too much. All right. So yes, so that's very large stop loss. But if I'm using retest method, right, guys, I'm using retest method and I put my stop loss here. I put my stop loss a little bit above here, right? My stop loss will be at minus 150%. Do you understand? Hey, don't worry, you don't know how to create features now. So, but we'll get there. I will show you. Okay. But this particular method did not work here because we did not get our touch. Unless it touches that level, we have not retested yet. All right. So it did not touch us. So we'll know wahala. Let's keep it one side. Let's find one that will work for us. All right. Good. So this is first example. I'm going to give you guys like 3 or 4 examples. Right. Good. Now look at another one. Can you see that? Sorry. Can you see that engulfing bar there? Right. So how do we make our entry? Very simple. So you see the last candle was bullish, then the next candle is bearish. Simple. The bearish, if you see how perfect this is, I want to see how perfect this is. All right. This is so perfect, right? That this particular baby candle, sorry, or smaller candle, right, can fit into this larger candle like 4 times. That's a perfect engulfing bar. Okay, very beautiful. So take your short position to enter aggressively. So once it closes, you take your entry. You see how I am putting the middle on top of the engulfing bar. You see how I'm putting it on top of where the thing close. Don't carry it and come and start here. Oh. Don't carry it and come and start here and then say, okay, no, look, oh boss, I'm entering for this engulfing bar. There's no way you are representing that type of thing to me, because I will not even understand what you are saying, because I'll be looking for the engulfing bar here that you started your tool. Do you understand? So if you want to start your tool here, start it here. All right. Good. That now, this is not for everybody, right? It's just for people that will want to do extra work, right? As you can see, our stop loss a little bit above, right? Good. Stop loss a little bit above the engulfing bar. Very simple, right? Then we can target different risk to reward and everything, right? So we can just target 1:2 just for safety sake, and this is 1:2. Can you see? 1:2.14. I've hit our TP there. All right. So this is still the aggressive method. This is still the aggressive method. Let's look for another one. Let's look for another one very quickly. So this candlestick pattern, they are so beautiful. Yes, there are some of my guys that trade only candlestick patterns. You're surprising. I promise you, they trade only candlestick patterns. There's some of them. There's one of them that has been cutting BTC long and BTC short, BTC long, BTC short, BTC long, BTC short, and the only thing was his fair value gap. They play. So depends on what you want to do, right? There's an engulfing bar here, but let's deal with this one now, so we can deal with the method of retest. Can you see that guy there? See the engulfing bar there? Let's zoom in. All right. So let's zoom in. Very perfect engulfing bar that appeared here. Very, very nice, right? Very beautiful. Good. Now, the first method of entry is what? Aggressive. So that means immediately the engulfing bar closes here. Can put it here. Okay. Can put it here. So our stop loss should be a little bit above the engulfing bar, right? Our stop loss should be a little bit above the engulfing bar there, right? Stop loss should be a little bit above the engulfing bar. And then we can now target 1:2, of course. So somebody's asking me how we are going to draw. I used that yesterday. I said it yesterday. How you want to extend your tool, you use that and draw it down. Okay. I'm just showing you bearish, bearish, bearish. Now this is the last bearish I'm showing you. So this is 1:2. Then you can now use this particular point here to slide to this side so that you can see if it hits your TP. Then you slide, and yes, as you can see, our TP hit. Now see, when you to show you that your tool is working, you see that line, it must show on top. Okay, guys. So once that line shows, your tool is working. Okay, guys, your tool is working. So look at that. Very clean. 1:2. But now that is the first method of entry. Now let's use the second method of entry. Finally. Okay, finally. So how does the second method of entry work? Carry your tool, put it in the middle. Okay, put it in the middle. All right, wait. This place is very quiet. Normally the place is very quiet. But like, can you guys hear me and see my screen? Mrs. Fioma, can you still see my screen?
We can hear you, but it's getting a little bit tough, but we are here.
Yes, sure. It will get a little bit tough now.
Um,
But guys,
mm,
so the way I will do it is very simple for you people. There's no reason for you to use your long and short position. To me, I'm just showing you. All right, I'm just showing you how the thing works. All right, there's no reason for you to use your long and short position. To we are just beginners here, right? So you can just show me. I will tell you your assignment is to give me engulfing bars, right? So you can just come and show me, boss. Look at an engulfing bar, and then what I want you to do is not just the hand. You see the way I'm showing it now, but at least it's showing me that okay, that your engulfing bar work. We are looking for things that work. Do you understand? It's only things that work that we are looking for. Nothing else. Okay, we don't just want to find engulfing bars. No, we can find that one anyhow, right? We want to find engulfing bar that at least even to my eyes if you work, to your eyes if you work. All right, good, because it's going to help you in future markets. If you keep looking at engulfing bars that don't work, or that just anywhere, right? What's going to happen is your psychology is just going to be like, I'm just learning something, Jare, and you just now be looking at structures rather than psychology. Okay, good. So I'm just showing you the beauty of engulfing bars, how they work, right? Or how beautiful they can be. So now entering with the retest method. So you see, I'll put my trend line in the middle there and hope for the market to come back and come and touch it. And before it starts falling. Because once the engulfing bar appears, the market will most likely fall, 90% fall. All right. So now you see the market came back and retested the, but now remember it gives us what? A smaller stop loss. So we can now bring our stop loss to be what? A little bit above the engulfing. But once we put it a little bit above the engulfing bar, now look at that type of stop loss. All right. Very, very small stop loss. And from there, you can now target level. So let's see. If I was to target, see 1:2 already here. This is 1:2. I hope you know that's 1:2. Let me zoom it in so that you can see it more clearly. Right. So this is 1:2, and the method of I entered with is the method of retest. They call it the method of retest. All right. Good. So I can now go further. 1:4 now. And let me show you. Let me show you how dangerous this thing can be. So if I want to target 1:5, I can target 1:5 with an engulfing bar. If I'm using the method of retest, it's easier that way. Okay. So yes, this, my friends, is a very simple engulfing bar. Very simple. So nothing stressful here. Just information overload. All right. So yeah, look at this engulfing bar. One candle engulfing the other one. We entered by retest by putting our line in the middle there. We put our trend line in the middle, right? All these things are not useful to you now, right? You're not going to be using them. Okay. We're just going to try to build up the learning. We're just trying to understand it. Now, what I want you guys to do is this. I want you guys to practice. It's not just about learning engulfing bar. It's not just about learning this and learning that, right? After you have, of course, normally you come back to previous market data and come and get them for me, okay? But look at current market, look at different coins and try to see if you are seeing anyone that has engulfing bar and try to enter. Yes, those students I was teaching that time, they were just too excited. They did not care. I told them they should wait. Oh, let's do futures trading later. Oh, they did not care. They were just entering the market and looking for the thing up and down. When they found it, they will take entry straight. They will take entry, not with their money. Some of them were using demo accounts. Some of them were just using their long and short position too, right? They will take entry and they'll come and show me, boss, see you. Yesterday I found this thing and it worked. All right. So that's the excitement. Very, very simple thing, right? So this is the engulfing bar, and this is a 1:5 risk to reward ratio, right? It means that if I were to lose $100 on this trade here, I'll make $500 by the time it gets to my full TP. All from an engulfing bar. No plenty market structure, blah 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 talk now. All from an engulfing bar. So this is just price action. Imagine what will happen when we begin to mix price action and market structure. Let me not talk about the glory thereof. So yes, see another one. Now let's talk about the bullish engulfing bar because yes, we don't have much time any longer. See the bullish engulfing bar. Can you see this? Looks very small, Abby. Completely engulfs the last brother. Very simple. Last candle. Remember, see, this is even a very clear button that you yourself, me, you, my brother, you can easily see. Very clear button. That forms a bearish candle forms there, and the bullish candle completely engulfs it. Can you see? Bearish, then bullish. This is at the bottom. So if I want to take my entry now, I will use position 2. Long position 2, please. And let's enter aggressively, shall we? Aggressively, how do we enter aggressively? We enter immediately the boy closes. So where the guy closes, then we enter straight, right? We don't wait for the test or anything. We enter immediately closes, right? Then we put our stop loss a little bit below the engulfing bar. Can you see now? A little bit below the engulfing bar. And yes, we now target 1, right? So let me change the color. I think let me change the color of my risk to reward ratio this thing. I think I can. I can. Settings. I think it's in settings. I can change the style. Right. Text color. Is that white? Let me see. Stressful. Let me see. Change to black and see if it will show up. So you can see that's shown us as black now. Can you see the risk to reward ratio? So it's 1:2 I used, right? But the major thing is where you place your stop loss. Where do you place it? Where do you place your stop loss? Write it in your book now, bro. You place your stop loss when trading a bullish engulfing bar. You place your stop loss a little bit below the engulfing bar, a little bit below the engulfing bar. That is all. Now, does that mean that your stop loss cannot get hit? Of course, it can get hit. In fact, your stop loss can come and get hit here and start going in your direction. No wahala, right? It's normal with the market, right? But there is no way. I said this thing before. No way you learn trading from me and you open 10 trades and anything less than 6 or 7 of them will not hit full TP. There's no way. I'm not your teacher. I'm gonna spoil my name. I'm not your teacher. right? But basically, right now let's target 1:5 too. So let's see what's the risk to reward now. 1:4.86. So last this is where 1:5 got hit. All right, so let's try 1:5. 1:5 should be somewhere around here. Let's see. So 1:5.23. So now all you have to do is to drag this guy this side. All right, let's drag it. See that? See this thing? See that line? See that line there? If he hits. So this is all just from an engulfing bar. Now, if I zoom out now, you see that place very minute. You see that? Very minute, very small. That small move alone has given us what? 1:5, and we are out of the market. Later on, when I begin to talk about these things more intensely, like when I begin to explain what's going on with this, you won't understand the real beauty behind these things on when you start looking for a strategy. I'm telling you, I literally have people who trade everything. Yes. Now I'm not talking about like they trade everything. I'm talking about there are people who trade supply and demand only. There are people who trade trend lines only. There are people who trade just this candlestick pattern they're talking about here only. Yes. There are people who trade only support and resistance only. They don't go. You cannot be doing plenty strategy around me. No. I know plenty strategy. Yes, so many. There's almost no strategy that is basic and structured that I don't know. Yes, because I am a tutor, right? But it's only one that is I don't have time. I don't have strength. So please, all right. So let's look for another bullish engulfing bar, because the bullish engulfing bar that I want us to focus on now, so that we can finish that guy there. Yeah. See this beautiful one, guys. See this beautiful one. Glory to God. Oh, W's in the chat. W's in the chat. W's glory to. Oh boy, I'll also start streaming, guys. Let's start streaming now. Look at that. Can you see that? That's a very beautiful bullish engulfing, but I think I should be zooming it out completely so that you guys can see what I'm saying, because I don't think some people are seeing it here. You see, the last candle is what? Bearish. The next candle is a bullish candle that completely overshadows the bearish candle. A bullish engulfing is formed. Engulfing, hear the word engulfing. When you're hearing the word engulfing, it's something they swallow the other one. It swallows it. It swallows it. And you can see that it's at a clear bottom. You can see it's a clear bottom, right? But the only way I could find this bottom was because I zoomed out like this and I saw that, okay, yeah, so this point was a turning point in the market. That's all. It's just turning point that we need, right? I don't even need to stress yourself to say, why is this place a turning point? Why should I use this in a turning point? Are you blind? You can see now. So just zoom out like this and find it. If you zoom out like this, you can see them now. You see top, see bottom, top, bottom. Do you understand? You can easily see turning point. This is turning point. This is a turning point. See turning point. Yes, see turning point. See turning point. See turning point. So that's all I wanted to find them at. All right. Good. So top and bottom. Now let's play with that engulfing bar. It's so beautiful. I want to play with it. Let me show you. Now, if we want to take our entry, right? What are our methods of entry? The first method is what? Is the aggressive. What position two are we using? It's a bullish engulfing bar. So what position two are we using? Answer it in your head. So I'm hearing your head now. That person that says short position two, I'm coming for you. All right. I know your name. Don't worry. I told you I used to operate in the prophetic very well. So now you put your stop loss a little bit below your engulfing bar. All right. Just a little bit below your engulfing bar. Can you see that there? You see that? Put your stop loss now. Now let me even show you why that is important. See what happened. Can you look at this thing? This candle. It's like it was after your life. See how close this thing came to hit your stop loss. Can you see that kind of thing? Do you see that? This is horrible. No, wait. That's not all. Imagine that after this thing now, see something. Market now, watch something, guys. Market now pumps the shit out of his life. See, imagine something. Market pump, reach there. Do you know what it means for BTC to move from around 100 and whatever to 116 or something, right? It's very crazy. But the only reason why you went out of the market was because you didn't set your stop loss correctly. So you see that is a correct stop loss. I'm telling you now, that's the correct stop loss. You put your stop loss a little bit below your engulfing bar for a bullish engulfing bar, and you put your stop loss a little bit above your engulfing bar for a bearish engulfing bar. Okay? Good. So let's put our stop loss there. Then we can now begin to target levels. We can target our easy 1:2. Okay? 1:2. Let's see the number. 1:2. All right. So we'll drag this guy this side. All right. So with our profit. drag, 1:2. All right, good. The target 1:5 and all those things, but that's not our business for now. All right, I don't have strength now. I want us to discuss the second method of entry on the bullish engulfing bar too. All right, so the method of retest, let's do it together. So what's the first criteria? We take our trend line, our line, we come to the middle of the engulfing bar, middle, all right, middle, all right, where you deem it fit to be the middle, right? You don't have to measure it. Just find a spot that looks like the middle. That's all. Okay, guys? Good. Keep that one there. Then you carry your long position to and open a position there. All right. So this was the first time we touched the middle here. So retest is done. But now, what is the main thing about retest? Retest helps to give you what? A better stop loss. Do you understand? It helps to give you a safer option because now you're not entering at where the engulfing bar close. You're entering now at the middle of the engulfing bar. That's if market comes to touch you. And yes, somebody asks, but mostly every time it works. No, sometimes it doesn't work. All right. Sometimes it will not work. All right. So I know class today is very heavy, right? But it's good. All right. It's good. Okay. Now we're finally getting started. No more baby treatment. All right. So increase your mind. Now, what the target 1:2, let's target 1:2 quickly. So see, 1:2 is already done. All right, full TP hit already. Let's target 1:5. Yes. So 1:5 at that level. See that? Yes. All from what? An engulfing bar. All from what? An engulfing bar. So let's play. I'm done now. I'm done teaching for today. So let's see another one here. It's a bearish engulfing bar. Can you see that there? Let's take our entry. Let's use the method of aggressiveness because the engulfing bar is quite small to me. So I will use aggressive. I know they share them. Enter immediately, the engulfing bar close there, right? Oh, sorry, I use long two instead of short. So enter immediately, the engulfing bar closes here. Put stop loss where? A little bit above the engulfing bar there. Simple, abi. Target easy 1:2. Come on, where money they go. Done. So I'm showing you over and over and over and over and over. All right, over and over and over and over. All right, so very simple thing. Very simple stuff. See another one. Oof. See this very perfect one here. See that one there, right? That's perfection at its peak, right? Because the engulfing bar completely overshadowed it, and this particular candle is just weak that is here. And do you know this is a candlestick pattern that you're going to learn tomorrow? This thing that you're seeing here. But don't worry, let's forget about that one. So we just take our entry again. Very simple. Use our short position too, right? Take our entry aggressively, of course, and our stop loss should be a little bit above the engulfing bar there, just there. It's okay. It's okay, just there. Eh? Target 1:2. Target 1:2. This 1:2. Full TP hit. No, don't worry. I'm with you here, my friend. We're not going anywhere yet. Relax. See another one. This is a bullish engulfing bar. Can you see it? So I'm giving you guys plenty examples so you get used to it. Another one, a bullish engulfing bar. Take our long position. Enter position there aggressively, please. Don't have strength. I enter by retest at that level too, but I want to enter aggressively. Put our stop loss a little bit what? Below our engulfing bar now, right? Good. Target 1:2. Let's see if 1:2 hit our full TP. Because the move was not very long, but I'm sure it will hit 1:2. See? 1:2, full TP hit already. This is price action, no? So I'm showing you price action. Let's keep going. Let's see if we can find one more for the glory of God. One more. Woo! Wow. I've spoken so much today. I've seen another one, but it's not as perfect as I want it to be. I want something glorious. Something like this. Something glorious. All right? Something glorious. Let's use the method of retest now so that you master it again. So see method of retest. Draw your trend line. Simple. Put your tool there. Or take your entry there. All right? You don't need to use a tool. All right? But you can put it just for clarity's sake. Okay? Put your stop loss where? A little bit below the engulfing bar. All right? Target what? 1:2, 1:3, 1:4, 1:5, depending on what you want to target. All right? Good. Or depending on which bottom you found that in. Let me move it back. But depending on which bottom you found that in, right? So this guy here is 1:5. All right. So this is 1:5 already. So yes, this type of days, there are certain days like this that are in the market and you just make so much money very fast. Yes. You just be the next thing, market don't hit your TP. And there are certain days that the market is going to be very, very slow for you. Yes, I'm telling you literal things now. The market is going to be very, very slow for you. There are certain days whereby the market is going to be very, very frustrating. But yeah, definitely, if you, as long as you stay, I swear, the day that you now see plenty money, and you will not even believe it. There was one of these traders. He said something. He said, I had been losing consistently for over 15 years, and at that day, in that particular day, I made something I have made that all throughout my life I would never have dreamt of making. The money he made that particular day from just constant showing up, the money, you have to be consistent in the market. The money that man made that day, he said the money he made that day covered all the losses that he has ever made in his life. He's not talking about in trading, in his life. Yes, trading is unbelievable money. Yes, the moment you enter trading, just know you have entered top tier of human beings. So give it your all. Give it your all. You see that, okay, no, this thing, the class was a bit very overwhelming. You read your book. Read your book carefully and see what you wrote, and come and check it on the chart, right? Because that's your assignment, of course. Your assignment is to get me a bullish and a bearish engulfing bar. So now I'm going to read the questions very quickly, right? So of course I'm still seeing engulfing bars. Like, look at this one here. Look at this one here. I'm seeing engulfing bars too much. They're everywhere. They're everywhere. Kai, look at this beautiful one. Kai. No, wait, let me enter that one, guys. Let me enter that one. That one is too beautiful. So let's take this bullish engulfing bar here. Let's take our long position to enter aggressively. Aggressive what? Put our stop loss a little bit below the engulfing bar there. Target 1 is to 2. This one is to 3 already. Let's target 1 is to 5 and see if we get it. If we get it. It did not. It hit. Wait, it hit. So we got 1 is to 5 from this small move, sharp, like that, and we're out of the market. All right, so that's beautiful. Okay, good. Look at this bearish engulfing bar here. Let's target and see if we can get 1 is to 5. Let's use the method of retest. How do we do retest? Carry our tool, enter the middle, draw it like that, and hope that the market will give us retest there. All right, good. So take our short position tool, enter. All right, enter there. It's no hard, right? Okay, looks like we didn't get it. Wow. Stop loss a little bit below the engulfing bar there. Then we can target. Let's start targeting 1 is to 5. Parara. So that's 1 is to 4. But definitely hitting 1 is to 5. Definitely. Yes. So yes, I used to target 1 is to 5 when I'm teaching because I like big money. All right. So all those small 1 is to 2 don't used to affect my life. And so it used to frustrate me. Okay. So I've given you guys more than 10 examples of engulfing bars, more than 10. So now, next thing now, you guys can now finally start asking your questions. Every other question I asked before now, I'm not seeing it. So I'm going into the toolbox, in the question box now, and I'm going to start seeing the reset questions. Don't take a trade. Tell me what? Do not take a trade. Do not take a trade. If you take trade this night, I prophesy, you will lose it. If you go to the market now, you can see a candlestick pattern. Probably just check certain pairs and all that. You just see a candlestick pattern and see what happens with the candlestick pattern. That's all, right? On aggressive method, after going down, is it possible to reverse to retest? Yes. The aggressive is just that, okay, you are entering immediately the market closes, right? But concern you if you do the retest later. But let's say the candlestick was good for you. You saw that, okay, no, it's not too big, right? So you can now enter, right? Yes. So the aggressive is very, very nice if the candlestick is not too big, all right? But the market can still go and do retest too, but that's his business. So people who entered retest will now actually, you understand? Will now actually learn it. Do you understand? People who entered by retest will now actually get their entry, but you have already taken entry, which is more riskier but better, all right? How do I know a perfect top and a perfect bottom? I think I've said that particular type of thing. All right, good. I'm seeing beautiful questions. Pious scholar, pious scholar, right? You're using 4 hours. What if you see the bullish engulfing bar there and by 5 minutes you don't see it again? You can never see bullish engulfing bar on 4 hours and go to 5 minutes and see it there. Never. Let me explain now. It's simple. It's not one candle that forms 4 hours now. Let me show you people something. Oh, wait. We need to talk about this one here because I think a lady from one group like that came to my DM, asked me that question. I used 5 minutes voice note and explain it for her. Now I cannot come back to this part of market, right? But let's go to the current market chart. All right. So this is the current market, I mean, this is current market. So BTC is pumping again. Very crazy coin. So now this is current market, right, guys? This is current market. Now look at this bullish engulfing bar here. Can you see this bullish engulfing bar? Now I'm going to mark it. Let me show you something that you don't understand. I'm going to mark it. This is the engulfing bar now. This is 4 hours. If you go to a 15-minute time frame, how many 15 minutes make up 4 hours? So you'll be seeing like 10 candles, 12 candles. Do you understand? When you go to lower time frames, you're going to see plenty candles that make up one of these things. Now let's draw something. Let me just draw a rectangle on top. Let me just draw a rectangle. Can you see that? So all right, so my rectangle is going to have issue because of so now look at that, right? Now let's go to that 15 minutes. Let me even bend my screen sideways because I don't like this straight nonsense. All right. So let's go to that 15 minutes now. It's only that engulfing by a circle though. Watch. 15 minutes. Now let's say we go to 15 minutes. Let's not even go to 5 minutes because that one a big wahala. Now let's come back to where this thing is. Can you see how many candles form that thing? Although there's still a bullish engulfing bar here, but like, can you see how many candles form that one bullish engulfing bar that you're seeing? So of course you can find your price action from lower time frames, but don't be saying that when you find it on a higher time frame, you want to come and see it the same thing on the lower time frame. No, that's not what's going to happen because there are a lot of candles that form that one thing. So yes, somebody also asked a very beautiful question there. Say, boss, which time frame is best for defining these things? 4 hours. If you see it on 4 hours, fine. If you see it on 1 hour, fine. Depending on what you want. All right. As a swing trader, the one on 4 hours is so beautiful. Do you know why? Imagine that after 4 whole hours, all you could come up with is an engulfing bar. After 4 whole hours, that means that there was enough time that was put into it. Are you getting me? There was enough time that was put into it for that engulfing bar to be formed. So that means it has more weight. It's heavy. It's 4 hours of 8 hours of market activity. 8 hours, because remember, there are 2 candles, right? So 8 hours of market activity. Imagine 8 hours of market activity, and then we now see only 2 candlesticks, the engulfing bars. Do you understand? So it's stronger. Which time frame are you using for your entry? Or time frame does not matter with the engulfing bar candlestick. It doesn't matter. Please use the time frame that you saw it on. Use it. The time frame that you saw it on, do what? Use it. Okay. So you can see now. Somebody's also asking if you can look for these candlestick patterns on different time frames. Yes, my brother, you can find it on 1 minute time frame, you can find it on 4 minute time frame, you can find it on 10 minutes time frame, you can find it on 1 hour time frame, you can find it on 1 day time frame, you can find it on 1 year time frame. Anywhere you find them, man, use them. All right, just show me it. Okay, good. So I think I've answered this time frame question. The time frame, is it the 1:2 or 3 or 1:2? No, 1:2 or 3 is risk to reward ratio. It's risk to reward ratio, and it can only be found on your long or short tool, right? You don't necessarily have to show me, right? You just have to show me, boss, see, I saw an engulfing bar. Look at the move that he made. All right. So just you to see the move. See the move. You don't have to represent it with the long or short tool, but if you want to go extreme, you can. Okay. You can represent it with the long or short tool. I wish I were using I'm using the current phone, but I don't want to go into that particular group. I would have shown you how some of the students did it. All right. I think let's go into Telegram group. Let me try to show you a candlestick pattern I was teaching today, and that's another community. I was teaching a particular community in the morning, and I was teaching a particular candlestick pattern, right? Show how many messages, guy? Good. Look at this thing. See the group I was talking about. This is the group. Can you see this? So they will add you to this group here now.
No, it's blank because of the group we restrict certain content, so it can't show me screens.
Oh. I used to do the screen. It's not blank any longer, right?
Yeah, it's not blank.
Yes, good. So you see that group there now, like this now. There are people there that are talking about so I saw this amount of money and all those things, right? I have $100 to sell for 100,000. If you enter there, if they add you there, and you go and send money, your money is gone. All right. The only person that sells crypto assets for women in crypto is on WhatsApp. No that and no peace. Here. So now let me show you people an example of what the boy did. Let me pray I find this very quickly. So good. He did a very perfect job. Okay, this one was another person, right? This one is my classmate actually. Came to me that he wants to learn trading, right? And let me show you. what he did. Now look at this. Can you see this? Right. So I don't know what candlestick pattern he was showing me here, but see, he now used the tool, right? He now used the tool to like show me, oh look, oh, see, I used my long tool. I entered 1:2 ratio. Now that is how I train when I'm training extremely. All right. When I'm training extremely, that's how I train. All right. So good. So, but you don't need to do this. Okay. All you can just do for me. Let me do it like he was doing it too. Look at this. You see, he was just showing, he will just come and show me the candlestick pattern, right? And then you see it's accompanied with the move that he did. So I cannot easily see it and say, okay, yes, so this thing worked. I have sense. You have sense too. So if I look at it, I will say, okay, no, this thing works. Do you understand? Yes. So those are the two ways you can actually send your assignments in. So how do you know a perfect top and a perfect bottom? I think I answered that question from the very beginning. The first thing that I said is when you want to know a perfect top and a perfect bottom, the first thing that you need to do, right, is to zoom your screen in. Wow, 9:57. Nice. Is to zoom your screen in. Okay. If you zoom your screen in like this, right? Sorry, let's go back to 4 hours. I don't like this lower time frames. Let's go back to 4 hours. I trade the lower to the forget me, guy. Just forget me. So you zoom like this, right? If you zoom out like this, right, you can see the top and bottoms very easily. My tool has disappeared, right? So you can see top. You can see top here. Let me use another tool. Arrow. Let me use this pointer tool. Right? Good. So you can easily see top. Oh, let me change it. Get another one. Right? Good. So from here, you can see top, right? Can you see bottom? Can you see bottom? Can you see top? Can you see bottom? Can you see top? Right? So these are the tops. You see top, you see bottom, top, bottom. Do you understand? So these are the ways. You just have to zoom out your screen small so that you can finally see it. All right. So that's how you get perfect tops and bottoms. All right. Very good. So, but later on, when we get into market structure, you now understand perfect top and bottoms. You now be seeing support and resistance, trend lines, swing points, supply and demand. That time you go enter your head well. All right. Which time frame are you using for your entry or time? I think I've answered that question. What's the specific time a buyer will rise? What do you mean by a buyer? My question was considering the SL. Are you to include the wick or only the body of the engulfed bar? Include the wick. As a beginner, include the wick. All right, include the wick. Okay, but if the wick is too long, let the wick go and die. Include the body. All right. If the wick is too long, right? But the engulfing bar itself, you must include every candle part of it. All right. If the engulfing bar, that is, if the bar that I wish I had my tool here. My tool is no longer here. But if the bar that engulfed, right, that long bar, include everything of the long bar. If it's the long bar you're asking about, include it. And of course, guys, know this. There are certain trades that when you look at them, you know that, okay, no, this one is going to cost me some money and everything. Don't enter anything at all. All right, don't enter it. You must not enter everyone that you see. Do you understand? You just enter the one that fits your criteria. Discipline yourself. Enter the one that fits your criteria. That's all. There's no need to overstress yourself. Do you get? Good. So, Pios, I think I've answered your question. So, Madoki, thank you. Thank you. I was fast in showing how to enter a trade. Nah, there's no way you're telling me that thing. I showed you how to enter like 15 trades here today. Yes, I did it just now. Yeah. Come go and sleep first. Go and sleep. If you sleep and wake up, you calm down yourself. You come back and you look at it. Just read your book. If you read your book, everything I spoke about is inside your book. If you actually wrote everything I was saying, because anything I'm saying that, or you write this one down, is the important information that you need, and it's everything that I said. Yes. How do you know your TP hit with aggressive trade? The TP, that depends on the long tool, right? Depends on the long tool or the short tool you're using. You know that your TP has hit when it has hit the top now. You don't know where your TP is on your long tool. If price gets to that part of your TP, if price gets to that part where you placed your TP on your long tool, that means your TP has hit now. That is all now. If price gets to the part where you placed your TP on your short tool, that means that price has hit your SL. Sorry, price has hit your TP on your short tool now. That's all. So that's why I give you guys that assignment. I said, okay, tell me what your TP is, tell me what your SL is, right? So now, if you were to place that in on the current market, right? If price now gets to that area where you suggested to be your TP, is that not TP hit? That is TP hit now. That's what it means, all right? So that means your TP has been hit. Can one place a trade without the appearance of the engulfing bar? Now, good, very good question. First of all, the engulfing bar must fully form. They hear me? Don't come and carry candlestick that is just currently going on and tell me, boss, oh, see, the engulfing bar formed, though, bro. You go cry, oh. Yes, because the candle can be going up as if no, this engulfing bar is forming, it's a bullish engulfing bar, it's forming at the bottom, and next thing the market will dump from there like mad. Yes, so until the time frame closes, until that 4 hours elapse and a new candlestick starts, that's when you can now see and say, yes, truly 4 hours has elapsed and it was an engulfing bar that formed, or it was this candlestick pattern that formed. Yes, that's the only way. Okay, please. Good. 1:2, 1:3. This person probably, right? 1:2, 1:3. Now, good. What's the importance of risk to reward? Check, my other phone is 5%, so it will soon die. My other phone is 5%, it will soon die, and that is where my network is coming from. So we have to be fast with our questions. So, good question. What is the use? What's the use of risk to reward ratio? Now, risk to reward ratio is helping you do something. What is showing you, or what is helping you to do, is that okay, now you're looking at a trade, right? You're looking at a trade, and as you're looking at that trade, you're like, no, this thing is worth taking, or this thing is not worth taking, right? It's from what? It's from risk to reward ratio. If the risk to reward ratio is less than 1:2, that means that if what you are risking, if it win, you cannot get up to 2 of it. Now, it's not a useful thing, right? If I'm going to make an investment, all right, let's say we want to make an investment. If I'm going to make an investment, do you think I'm going to be risking, I'm going to be making an investment just to make, let's say I put 1,000 naira, I just want to make 1,000 naira back? No, of course not. I want to invest in something that can give me maybe 2,000. That's like, let's say I'm a broke man and I want to invest. I say, I want to invest in something that can give me maybe 2,000, 3,000. Do you understand? Now that is a risk worth taking. So what that risk to reward is trying to help you guide you to do is to show you, right? Is to show you something and show you that, okay, yes, so this trade is worth taking. So when you get a trade, when you get a particular setup, right, that can give you 1:2, 1:3, 1:4, the more the reward, the more the reward, the better the trade to take, right? So if I get 1:2 like this now, let's say I got 1:2, right? I get 1:2. That means that if I get in this trade and I lose $100, right, I can make 200 if you hit my TP. That's a good thing. Yes, and you can be profitable from that, which I'll teach you guys when we get to risk management. But I can be profitable from that. So that's a good thing. Do you understand? So that is the meaning of risk to reward ratio. That one, you lose $100, you make $200. You lose $100, you make $300. So it's a good bet to say per se, right? It's a good bet for me. Okay, good. So that's what it means. Okay, yeah. Can one place a trade? Is somebody really asking me which risk reward is better for bullish engulfing bar? I said as a beginner we use 1:2. Then can one place a trade with a previous engulfing bar? Can one place a trade with a previous engulfing bar? If the engulfing bar has passed you and you really wanted to enter with aggressive, then just carry your head and go and sit down and be waiting for the next engulfing bar that will touch you. But if the engulfing bar has not passed, let's say it has passed, right? But you still want to enter, then you try the method of what? Of retest. That is all. If the method of retest has already been retested, then you can look for another thing to use to enter the market if you really want to enter, or you can go and rest if it's engulfing bar that is your own wahala. Do you understand? So you don't necessarily have to force a trade. If the engulfing bar has closed, then you cannot take aggressive entry. That's if you were there. Oh, if you are not there, you cannot take what? A limit trade by using the retest method. That's if it has not retested yet. You understand? Please, I didn't get the second method. I mean, can you say the name again? Okay, it's called the retest method. You draw a trend line at the half of the engulfing bar and hope for the market to come and touch it again and continue going upwards. What's our assignment? Get me a bullish and a bearish engulfing bar. That's all. At a good top and good bottom, please. At a good top and good bottom. What's the best time frame we use for trading the engulfing bar strategy? I said you can trade the engulfing bar on any time frame, including 1 minute. 1 second, said you can trade the engulfing bar. All right, but The higher your time frame, the more stronger the price action. Yes, the more stronger the candlestick pattern, because the time frames are getting higher and higher and higher, right? You know that it took a lot of time, it took a lot of effort, it took a lot of money, it took a lot of whatever, right, for this particular pattern to form. All right, so it becomes stronger. Okay, yes, so good. I didn't get the second method. The second method is called the retest method. Like I just said, you put your trend line in the middle of your engulfing bar and you take your entries from there. You wait for the market to come back and come and touch it. Maybe your engulfing bar has closed and left you, right? You can now use the retest method. Maybe the engulfing bar, the bar that was engulfed, right? That's like the second candle was too long, right? You can now put it there and hope for the market to come and retest that half because it was too long. And if you try to enter aggressively, your stop loss will be too much. Okay, good. How do we then put our trade? What's that question about? Like, I'm confused. How do we then put our trade? It's confusing. All right. I think Precious, I think I've answered what I mean by 1:2, 1:3, right? In putting SL, are we to consider the week or only the body? I think I've answered that question too. All right. Oh, the recordings are going to be dropped. The recordings are going to be dropped. Grace. In putting SL, are we to consider the week or only the body? I think I've answered that question too. Right? Yes. Once we see it on 4 hours, we also enter in the trade on the same 4 hours. Yes, you put your stop loss a little bit above the engulfing bar, or depending on what engulfing bar you're trading, or a little bit below the engulfing bar, and then you put your risk to reward to 1:2. Yes, so once you see it on a 4-hour time frame, you can enter. If you see it on a 15-minute time frame, you can enter. Right? Do you understand? Mm-hmm. Prior scholar, I don't think you used to hear the English I'm speaking. No. Yes, I think so. Now, I've said something before to you guys. I've said stop asking questions 2 times. I am not deaf and I am not blind. Don't ask questions 2 times because you are making other people cannot even I cannot even see other people's question. Right? So ask a question once and leave it. I'm going to read through all of them. Do you understand? I'm going to read through all of them. Definitely I will. Okay, definitely I will. All right. So when they say an asset is bottom, that means the asset has gone back to the same price that it started at. All right. If the asset started at, let's say, it listed on the exchange at $1, they say it has bottomed. It means that it has gone back to that $1 or is at around that $1 range. Do you understand? That's what it means. How to identify it? Just zoom out your screen now and go to the beginning and see where the candle listed and check that if that's where it was. If that's where it is currently. I opened some long positions on that particular type of thing today. I opened long positions on Jelly, Pippin, and all those ones because they were at their bottom. Yes. You got lost in a way. Sorry, ma. You watch the recording. You guys have made me talk so much this week, eh? I have sore throat. Does it mean that once I spot the engulfing bar on the 4 hours time frame, I have to also enter the trade on the same time frame? Yes, that is what I am saying. You enter on the same time frame. Did you see it on 15 minutes? If you want to trade it on 15 minutes, go to 15 minutes and look for engulfing bar. When you see it on 15 minutes, you enter on 15 minutes. How long can you wait for TP? Me? See, I'm just a wicked person. I can stay for a 1 month hoping for TP. Yes. I can stay for a few hours hoping for TP. Yes. And then just that you understand position size, and I'm not open too many positions at once. But there are some trades that I trust so badly. They're like River. I wish I could show you guys that setup. River was beautiful. I opened the position on River USDT 2 times. First one I opened was at $8. The second position I opened on River USDT was at $12 or so. And I opened it until it got to $26. Yes, I opened another one again today. But like that first one I opened, the second one I opened, all of them, I held 2 of them till it hit my TP of $26. Yes, I did not send it. All right. So it depends on how long the trade wants to take. Sometimes trade might take some time and all that, right? So all that, we're going to get to all that so that you understand how to be more patient with the market, right? If you want to be a swing trader, you have to be very patient with the market. Right? All right. I think I've answered your question, Queen Weze. All of you are just repeating the question. Please, is the engulfing bar pattern not affected by fundamentals? What's fundamentals about? Not affected by news. You can enter an engulfing bar pattern and it will go against you. It will hit your SL. Yes, of course. It can happen, right? But it's very rare. You understand? All the candlestick pattern I'm going to teach you guys, right? It's very rare for it for that the market came and hit your stop loss after you entered at a good level. No, it's very rare. Okay. How do you know when the 4 hours have elapsed? So you have you been coming to class? As you can see, I have always spoken about this timer. You see that timer there? You see it? See the price with timer. Current candle is what? Remaining 2 hours, 47 minutes, 56 seconds, 55 seconds now for this candle to close. So once that time elapsed, the candle will close. That's all. Once time finish, candle close, finish. Is it wise to don't take trade though? Better go and sleep. Tell me what go and sleep. Is it wise to re-enter or continue a trade after I have hit my TP and the market is still showing signs of continuity? Of course, if market is still showing signs of continuity, this is what I always tell every single community I enter in, every single place I enter in and I try to teach, right? See, listen. Once you take your entry, you put your stop loss, you put your TP, everything should be technical. That's all. Once you see that, okay, no, there's a technical reason why you want to enter this thing again. Continue the go, guy. Chop man, chop everything. I told you now, I open river position from $8 to $26. I've closed it, right? I use my TP close, right? I've now opened another one again because I'm seeing signs of continuity to around $30 to $40 to $50. Do you understand what I'm saying? Yes. So yeah, sure. Okay, sure. If an engulfing bar formed on the 4-hour time frame, but they are long wick at the bottom of each candle, can we consider it as valid? If an engulfing bar pattern formed that, so if there are long wicks formed at the bottom, right? You can now try the method of retest. If the wick is that long, you can try the method of retest. Okay, you can try the method of retest so that you don't have a large stop loss, right? Or you can as well just leave the engulfing bar alone and wait for God to give you what you can trade. Finish. How do you determine your risk to reward ratio in the current market? That question is quite confusing to me because I don't really know what you're asking about, really. But this is the current market, right? And now we have seen this is BTC 4 hours, and I'm seeing quite an engulfing bar here, but this is called a tweezer pattern. No, this is an engulfing bar, right? This is an engulfing bar, although it's not a very perfect engulfing bar, but I'm seeing it here, right? So if I want to take my entry here now, right? Now see, I will take my entry, my short position. I'll take my short position here, right? And I'll carry it and enter maybe by retest at this level. See retest here, right? So this is the middle. So I'll enter at this current candle that is here like this now. So gang gang gang. Yes. I will now put my stop loss a little bit above the engulfing bar as usual, right? A little bit above the engulfing bar. A little here, a little there. Until the day we come, you start working. So to determine your risk to reward ratio, you just have to drag this guy down now. See this guy here, drag it down. Drag it, drag it, drag it, drag it, drag it. So can determine 1:2 like this now. Okay, I can leave it at 1:2, which is my entry for long, right? I can leave it at 1:2 there like that, right? So that's I just determine my risk to reward ratio. So your risk to reward ratio, I don't know if that your question is how to show your risk to reward ratio. This is how to get your risk to reward ratio using the short or your long position tool, right? Good with the current market. That's all. All the things we are doing with the past market does not change when it comes to the current market, though it doesn't. What if I'm trading with $10? What will be the risk to reward? Risk to reward does not concern your money. Risk to reward does not concern your money. Risk to reward is only telling you how much that your money can be if, or what you can reap from that your money if you enter that trade. It's telling you that, oh, look, I have $10 and you risk it. They're telling you that if you lose this $10, if you're using 1:2, you'll be coming out to $20 if you hit your TP. That's all it's telling you. It's not telling you how much you're going to make or how much you're not going to make. Right? Good. So if your risk to reward is, and then another thing that happens again, there is leverage there. That's what we call leverage in futures trading. So just leave all that thing now, all right? Leave all this thing, leave all this money parts, all right? Leave market order too. We are not talking about futures trading here, please. Fire scholar. I'm not answering that question again. I think I answered that question. I told people not to ask questions over and over and over. Now look at how I'm confused about whether I answered that question. Can one place a trade without the appearance of the yay engulfing bar? I can't understand your question. Okay, Chiwendo. Please repeat that question. In a situation where you see a bullish engulfing bar and a bearish engulfing bar appears, what should I do? A bullish engulfing bar and a bearish engulfing bar appears. Where are you at? Are you at the bottom or are you at the top? Then you understand what to do. And you understand which one to follow. If you understand, you see, are you at the top or are you at the bottom? Answer me. Eh. You know what to use. Can we use the method on gold or other? Yes, yes, yes. Oh my God. Let me try it. Where is Zawu? We're not supposed to be here for this long. Oh. So this is gold USDT. Oh yeah, now. Oh yeah, now. Let me show you. Can you see engulfing bar there? You see what's happening? You see another engulfing bar there? You see what's going? Mhm. Let me show you. Oh, relax, 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 my friend. Relax. I will show you. I told you it works everywhere. Can you see another engulfing bar here? You see what's going on, right? It's engulfing bar, abi? So price action works on everything. I'm telling you that price action works on everything. Can you see engulfing bar there? It's not engulfing bar that caused this gold crash. It's engulfing bar now. It works everywhere, my friend. It works everywhere. Amigo, it works everywhere. Can you see engulfing bar there? Is it not it that caused this move? Is it now? Is it? Is it? Eh? No stress. See engulfing bar there? It's not it that caused this move. It is. So yes, every single thing that has charts can be traded like this. Mm. Mm. I think I answered the question. How long can a trade last before you take profit? It can last for as long as a month. That's your choice. Or it can go very, very fast. All right. So you can go very, very fast. Yeah. So I just think I answered this good question now. And of using the exact place to submit assignment. It's the Telegram group now. They have posted that link over and over and over. So I think it's the Telegram group. What's the best time to enter a trade? What do you mean by that? The best time or the best time frame? The best time frame for me is the 4 hours time frame. I love the 4 hours time frame. The 1 hour time frame is unique on its own, right? And every other thing. So yes. Ah, is the engulfing bar pattern not affected by fundamentals? Like I said, I don't understand what you're asking, but I am saying that if you can enter an engulfing bar and the market will still go against you, even at a bottom, the market might just decide to break that bottom that day and continue going downwards, right? So it can still go against you, but it doesn't happen. It happens very rarely. Do you understand? It happens rarely. So yes, fundamentals. What is fundamental? Fundamental is rubbish. I've said it before. At the beginning of this class, I said fundamental is rubbish. Here. So believe me when I tell you that. Please show me on the chart how to identify an engulfing bar candle that has passed and the present one to trade it. Yeah? That has passed and the present one to trade it. I don't understand what you're saying. How do you identify bullish engulfing and bearish engulfing candlestick pattern? Go and watch the whole recording. Can one enter a trade if you did not see the engulfing bar? Eh? It's not engulfing bar we are learning today, my brother. So if you don't see it, you don't enter. Oh. Don't enter. All right. Maybe unless you go and we go further and you learn more candlestick patterns and everything, and then you see, okay, yeah, oh, look, oh, I learned this thing. Oh, I did not see engulfing bar, but I saw this one. I will show you all of them now. You see different ones that you can see instead of engulfing bar. It's not only engulfing bar that is a candlestick pattern. There are plenty. All right. We can't talk about all of them. The situation where the 15 minutes and 1 hour has engulfing bar waiting to retest, which one will the market respect? The market can respect anyone. Yes. But the stronger one is the 1 hour. Are you getting me? The market can retest anyone, but the stronger one is the 1 hour. The stronger one is the 1 hour. Why? Because it took 4 15 minutes for that 1 hour to form. Are you getting what I'm saying? It took 4 15 minutes for that 1 hour, just that one candle. So it took like 8 15 minutes for the two engulfing bar candlesticks to form. Do you understand? If a candle is trading on 4 hours, how do I calculate to know the remaining time before the hour 4 hours finish? I think I just showed that now. I showed that now. All right, I showed that now. The Telegram group isn't your own group. No, it's not my group. It's the Women in Crypto group now. It's there. They have shared the link over and over and over. Right? I think that group was created basically for that. What's the best time frame for scalping trade? If you want to scalp trade, 15 minutes time frame and below. 15 minutes time frame and below. If you want to swing, 4 hours and above. If you want to trade both swing or scalp or intraday, intraday means you open like 3 positions a day or 2 positions a day and everything like that, right? So you trade almost every day is 1 hour, 4 hour, 15 minutes. 1 hour, 4 hour, 15 minutes. So those three, that boundary. All right. So yes, I don't think there's any other question that I've not answered. Jesus. Wow. Yeah. So I don't think there's any other question that I've not answered. And let me finally lick this sweet that has been next to me here for a very long while now. So basically, and I think I am done for today per se. I don't know. Is there any other question? Please, which platform can we have the replay video of the lectures at? It's YouTube. I think they normally post it to YouTube. They normally post it to YouTube, yeah. So I can see it on YouTube there, and they normally drop the link that okay, see you, we have uploaded this. So if you have not seen that, that means you have not been watching the group. So I think I've tried to answer everybody's question. And yes, I'm finally licking my sweet. It has been next to me since for a very long time now. So thank you all for coming out. I'm done now.
All right. Thank you so much, Sage. Thank you for today's class. Quite intense. So everyone do your assignment. So please, one more thing. Like whenever I say that the class is a bit tough, I know that there's some students who have been with us for years, 2, 3, 4 years. We are more exposed and more experienced in this field than people who just joined us. So allow us so that everybody will be carried along. Okay, the TA class is not only for old members, it's for everyone. And Switch is actually doing a very great job trying to break it down for everybody. Okay. All right. Thank you so much. So we'll continue tomorrow, same time, same link. The uploaded videos will be posted when my staff come to work tomorrow. She normally comes by 9 before 10 to be posted. And I will share the link across so that everybody can you can actually watch the recorded video, do your assignment and submit before class starts tomorrow by 8. All right. Thank you. And we'll continue tomorrow. Good night to everyone.